So good morning, everyone. Thank you for joining us for another edition of our weekly real estate backstory, where we kind of try and expose the soft underbelly of the real estate world here in the Atlanta market, kind of what's going on, the comings, the goings. We are your hosts.
My name is Richardson. I'm a compliance broker for Maximum One Realty and Realtor Partners.
My name is Alan Richardson. I'm the managing broker for Maximum One Realty and Realtor Partners and her lovely husband. At the same, let's just kind of jump in.
Yeah, let's jump in.
Yeah.
So over the weekend, I had an inquiry in reference to a couple of issues. Right
Thank
now.
you, Shannon, by the way.
Yes, thank you,
Yep.
Shannon Kirk, for bringing the issue up.
Yep.
Basically, a lot of folks right now, in order to be a competitive bid, a lot of agents are offering writing contract without any due diligence, and rather than due diligence, they're requesting right to request repair. But we're
seeing a
before we
lot
go
of things.
there-
Yeah, I mean, we're seeing where we're having a lot of agents that are still waiving inspection periods, and we're not a big fan of waiving all inspections kind of thing, because that's like the big safety feature for your sellers. I mean, for your buyers. I'm sorry.
So when they say waiving inspection period, basically they're meaning due diligence period. Okay, because due diligence is typically your time for inspection. And rather than doing a due diligence period, they're doing a right to request repair and also adding on an option money. So
But before we get an option money, let's just kind of go over the difference between a due diligence period and right to request repairs, because what we're seeing is that a lot of agents that submit offers with right to request repairs have no idea what a right to request repairs actually means.
Even with the right request repair F-273, it does have a time limit. Okay, so to 9 out of 10, I've seen most common is 7 days. And so what that means is that just because you request the right to request repair does not mean seller is obligated to repair anything that's cosmetic, because in that form itself, it specifically outlined what the defects are. The defects are termites, anything that constitutes a violation of the current code, unless the property is grandfathered in. So for example, if you have a house with GFCI, that's only 2 prong and no GFCI. Guess what? The house was built in 1960. So therefore, guess what?
It met the code at the time.
It met the code. So you can't ask a seller to change that because the code has changed. And lastly and thirdly is only on item things that are not in proper working conditions.
Yep.
So if the HVAC, even though it's on its last leg, it's running, it's working, you can't make the seller do the repair if it's in a proper working condition.
Yeah.
So these are the definition of defects on the right to request repair. So don't think you can go in and request everything else under the sun and the moon. It's very specific.
Yep.
What the repairs are. And guess what? If seller agree to these repairs that are not proper working condition or termite related, or things that are not grandfathered in, or grandfather in or not grandfather in, then buyer can't use this exhibit as a back out and get their earnest money back. Okay, so this is the reason why this is more powerful than the due diligence period is that the buyer is basically telling the seller, hey, Mr. Seller, I ain't committed. I ain't gonna move forward by your house unless there's just a defect to the property. If there's no defect, guess what? We're moving forward.
One other issue that we see though is that a lot of our sellers don't necessarily like this form as much, in part because when they submit the request then they're required to submit the inspection report also. And a lot of times the sellers don't want to have they don't want the inspection reports kind of thing. So, it kind of has been a double-edged sword. The other place where we have just a real challenge here is when agents are doing right to request repairs along with option money. Now, first of all, option money is just, I don't know what you call it.
Some people call it bribe.
Yeah, legal. It's a legal bribe. Okay, it's not like under the table. Everything's above board, so it is a legal bribe, but it's still a bribe. Yeah.
Option money is basically the buyer say, Mr. and Mrs. Seller, choose me. I will give you $10,000 or whatever the amount is in order for you to give me the right to purchase your property. And what happened is option money is not a trust fund. It goes straight to the seller.
Yep.
So if you, the buyer, do not close on the deal, guess what? That option money is good as
Still
gone
gone to the
as
seller.
the day
Yeah.
you submit it and release it. So
You better
there's
really like the
no-
seller.
Yeah, there's no holding back.
So the
Okay.
challenge on things on like the right to request repairs, that if they put option money out there, honestly, with any contract, when they put option money out there, that stuff's gone.
So if you put option with a right request repair, and guess what? If your buyer do not like the HVAC, but is in proper working condition, and they terminate based on the proper working condition of the HVAC because it's old, they lost that option money.
Yep.
So,
All right. We're gonna
and
talk.
just back that up really quick. If they have no due diligence on that neither, guess what? Earnest money is gone as well. So it's
full of
double-
good news.
Well, it's double-edged
Nah, I'm
sword.
with you.
So just want to make sure you guys know what you're writing.
Yeah, exactly. All right. There was a new study out that came out that said that found out that 65% of Americans mistakenly think that carrying a credit card balance helps their score. And so, we have a lot, misconceptions around interest rates and how those things are running. The study came out and said that, among 79% of Gen Z thinks that keeping a credit card balance helps their score. Now, a really low balance, maybe, but because you show you have a lot of available credit, but just holding on to large amounts of credit is, carrying credit card balances is not a great thing.
Your credit card should be no more than 10%.
Yeah.
Of the usage.
And then almost half of consumers haven't checked their credit score in a month. And that's kind of, you want, especially for folks intending to buy a house, you need to keep a really close eye on that. The third one is that about a third of all credit card holders
do not know their interest rate, y'all.
And some of them are ridiculous,
20
like 25, 20%, like loan shark, like some guy named Five Fingers is going to come talk to you, kind of thing. The credit card rates are ridiculous. So, and so we kind of bring that up largely because interest rates are rising, and so we're just gonna. One thing that really kind of came out this past week, we had several interest rate increases this past week. So, we finished the week or we came in at 4.42, and that's on the primary mortgage survey. But that is, but the reality of it is, we actually finished the week at a 4.95. So we're really pushing 5%, and I'll show you some more information about that.
This is almost pre-pandemic interest rate, though.
It is, and so like when you look at, well, gosh, this is how our interest rate has looked over the last 20 years, and so you can say, gosh, these interest rates are ridiculous. This is stupid. Okay, well, but if you look at where we were 20 years ago, up in the 8%, we're still running really, really good. And even if you look in there from like 2008, 9, 10, 11, all the way up to 2019, we're kind of moving into that range. And I do see us leveling off in there a bit. We have a lot of things going on with raising, with the Feds raising the funding rate and that kind of stuff going on. If you look at it even longer term, like this is how we look, since they started tracking the data in 1970 something. And so you can see interest rates have continued to come down. So we are definitely on an uptick right now, but we know why we're on an uptick. As we said, mortgage rates came in really close to 5%. These surging rates really are kind of prompting a lot of economists kind of look at their at lowering their sales forecast. And we do really think that it is, we'll talk a little bit more about it in a second, but we had two big jumps this week, based on all the things going on out in the world. We actually saw two hike jumps in mortgages. And so we're seeing now a lot of mortgages actually coming in over 5%. We're seeing the ones that are coming in at the mid to high fives now. Those are the ones who are not managing their credit. Those are the ones that are just getting in at the really low,
right?
The lowest,
minimum credit score.
Their debt to income ratio is right on the line, things like that. So we need to be helping folks to really understand these things much more so. At the same time, we saw FHA and VA loan demand drop, and we know that
And that's
there's a
because the
correlation.
seller is demanding cash and conventional loan, just because they're much easier to work with.
Well, but we're also seeing less demand as well, and that's because we
A
know
lot
that
of them are just getting discouraged
Yep.
because they, a lot of these buyer has gone out and made 20, 30 offers and not have any one of them stick.
Well, and at the same time, this is what our mortgage payment on a median asking price is right now. It is up about 25%. And so, right now, the median mortgage payment across the U.S., this is national data, is 2123, which is significant. And you can see the jump that we've taken, this past year has just been staggering on where our mortgage payments are going. This is going to have impacts on the housing market. Now, it's not going to have immediate impacts.
Now, but I can see where now your seller may not have a choice but take FHA and VA loans simply because the buyer is going to be less due to the rising interest rate and the cost of housing being so high.
Like home sales fell by 4.1% for the fourth month in a row. And now these are, this is what's coming up on closings kind of thing.
Correct.
And so we're running on 4 months already down. We've seen that data. Now, and our take on this, and just so that we're really clear, I don't look at any of this causing an immediate downturn in our market, and even then, I don't see it causing a huge downturn by any means. We're not going to keep seeing double-digit price increases.
That just it. I think where the seller's concerned right now, it has been a seller's market. But I'm seeing this is going to be leveling out here very shortly due to different things.
I don't think it'll be as short as we would really expect. We're moving into the spring buying season and summer.
We are.
Those are the greatest demand we have anyway. So no matter what, I think spring and summer is still going to be on fire, even with rising interest rates. I do think
fall's going to be interesting.
And fall is where I really see a lot of changes coming in. Matter of fact, I went and pulled the numbers kind of thing, and so you can see, right now we finished with a median sales price over 17%. We're running around 35% for the last 2 years up.
So that's cut by half right now.
That's for the last 2 years total. So again, our median asking price is up about 15%. We're finishing higher because we're still coming in over asking. Now, you can also see that this is continuing to trend up. We don't see any sort of downward trends. It's actually following normal paths and trajectories here. Now, as we just said, the mortgage payments are through the roof, though, and that is this slide right here is what's really kind of indicative of where we feel this change is going to come.
Absolutely.
Pending sales. Pending sales is up 0.8, almost up 1% over last year. And right now, the big challenge has been, gosh, our number of sales, even though we have so much demand, the number of sales that we have right now is not being held back by demand. It's being held back by supply. We don't have enough homes to sell. We're not putting enough homes on the market. Our sellers our folks who are interested in selling are worried about where will they end up. They don't want to end up homeless. And I totally understand that. But that's our biggest challenge. The number of sales that we have going on is not because because folks don't want to buy.
There's just not enough inventory.
New listings of home is down again. So we're down almost 7% year over year. So we have less listings.
And that's caused by supply and demand as well, material and labor. So, new builders are having a hard time, and you are seeing now new construction are starting mid 300s.
So that's the new listings. This is the really bad news. Active listing of homes for sale is down 22% year over year. And you can see where last year was versus 2020. Last year was down. So we're seeing massive declines in active listings. Again, this is why we have so much demand and not enough supply, that when that happens, prices rise. 59% of our contracts are with I'm sorry, of our
Our
properties,
sales are going under contract within 2 weeks.
even higher than last year. Matter of fact, we're over last year's peak, and we know last year was I mean, goodness, it was a summer of being on fire kind of thing. Right now, we're averaging 21 days, which we're heading down into that summer buying season. It's going to be getting even worse. About half of our homes are selling above list price. And see, that's where it's getting, like we look at that mortgage,
Right.
the mortgage information. We're like, gosh, this can't keep up. And then you're looking at, even right now, over half of our homes are selling above list price. So the amount of demand out there is palpable. Only about 3% of our listings had price drops. Thank you, drops. Now that is up, and so I do think that as sellers have to kind of get.
And what happened
checked.
is these are homes that seller listed too high from the word go.
Mm-hmm.
So now they're dropping them.
Yep. Now, as far as like the Atlanta data goes, this is the amount of new listings, and we kind of follow along with those same national trends. And so you can see what's in the black lines there. As far as our new listings and year over year, we have less listings, just like the national data, and we almost mirror it identically, kind of thing. And then our pending sales. This is the one that I find challenging, and is that our pending sales are down. Again, our pending sales are not down because of
lack of interest.
Right. It's because we just don't have any sorts of inventory out there.
So
60 Minutes ran a really interesting segment this past week talking about the what's happening with rent, as well as like what are the big causes of it out there, and their statement about, we have depending on the income, the lower the income, the higher the percentage of rent
absolutely
the folks are paying. And so we're seeing where many renters are paying upwards of 50%. Half their income is going towards rent, and that's a really big deal. But the other side of that is like where's it coming from? And so the first place where this really came from, and we agree with them entirely, is that we have had chronic underbuilding. We have not built enough homes. The other side of that
if
is
you
that
think about during downturn market from 2008 to about 2016, builders stopped building, and that was almost an 8-year segment. And that is substantial when you stop building, because we have PVC farm for a long time.
Yeah, all we do is use up existing inventories, kind of thing. So at the same time, we have some of the highest demand that we ever have. We have a millennial generation, and I'll show you some slides here right now. The millennials are making up the largest segment of our buyers right now, and that has increased. And then they also kind of point out, the corporate landlords and what's really going on. There's a big push across the nation as far as BTR, build to rent. So we're having entire neighborhoods that are being built to lease out. And so what really comes from this, and what I hope that you'll take from this, is that wealth in the United States is tied up in home ownership. It doesn't matter if we're talking from a landlord's position or from a homeowner's position. A landlord's position, they're looking to capture that wealth.
Absolutely.
And hopefully from a homeowner, they're capturing that wealth. For us, we really want to promote home ownership. The days of saying, well, I'm just gonna keep renting. It's just one of those things where I can't really afford to do it. It's getting to the point where you can't afford not to. And if we really care about these communities, we have to help.
50% is huge.
Oh, it's astronomical kind of thing.
I mean, in the past, I remember
30% was like the high limit.
30% was a high limit. Now we're pushing up 50%, and that is really huge, y'all.
And it's dangerous. We're going to end up. We already see where the highest rents and have the highest homelessness across the United States, that kind of thing. And so, but I'm also a realist about, well, what can I do? Well, I can also be real honest about what's going on in the market, and I can encourage my clients to really look. I want you to stop renting. If I care about you, I want you to know that renting is, if you rented a home a year ago, you have zero equity this year.
And just because you have cash buyers, I can guarantee you 9 out of 10, sometimes the cash buyer doesn't always go through. Not only that, if the cash buyer is the highest
Yeah.
offer, guess what? You can always counter back to home owner occupants, with maybe another
Yeah.
$1,000 incentives, more than cash buyers.
But this is really not going to change. Like this right here shows the share of house hunters looking to relocate is at a all-time record. And I'll show again that Georgia and Atlanta is one of the top 10 destinations in the entire United States for that. At the same time, this is our housing supply over since 2017. As you can see, just the number of homes, we went from having almost 1.2 million homes available on the market down to about 400,000 homes. So we're down 2/3 of our supply from just a couple of years ago. And that's the whole big picture, because at the same time, if you look, these things correspond. Demand went up, supply went down, prices went up, and that's exactly what it is. Our overall home price jump is 34% in the last 2 years.
And that's huge.
So, the weird thing here is that the new construction has declined, and it surprised analysts. It hasn't really surprised us. Inventory for properties, has hit the highest level since 2008. However, sales are going down. And so they're looking at, gosh, why are, like we've been building, everyone's saying building homes, builder sentiment is down kind of thing. But the big kicker here is the median sales price of new homes.
Mid 300s.
Yeah, they're out,
everybody
they're pricing out. And so what I found really, really ironic here was, so the National Association of Home Builders just released their home affordability scale. And they said, this is what percentage of Americans can afford what income. And you can see that right now, around 75% of Americans can afford homes under $325,000. Actually, it's
And with a
250.
rising interest rate, just remember, as I said before, for every point that goes up, there's about $50,000 loss of purchase power.
So, but what the thing here is, that I hope our builders that are watching and some of our friends that are builders understand, like when you build over 325, you're going after 25% of the market. I mean, this is from the National Association of Home Builders. This is not some made up number. So building in the mid to high threes, building in the fours is not sustainable. We've got to get building down. I know that there's a lot of options, a lot of challenges there, but we also see right now, and for the agents out there, townhomes do not equate cheap. Yes, we can't speak, but townhomes don't mean cheap. Townhomes don't mean low rent.
It isn't. I have seen some beautiful townhomes, and you know what? For some folks, it's great. You know why? Because they don't have to mow the yard and do a lot of maintenance.
Well, but we're seeing where like that 3.2 starter home that we started with, 3.1.5 that we started with, that's not available for our buyers right now. And our buyers need a product that they can afford to get into, and the builders need a product they can afford to build at that price point. And so we're seeing where there's a lot of townhome projects that are on the books and coming out right now. The challenge that I'm hearing is that there's a lot of agents who are like, "Ew, townhomes. Ew." So we're a little snooty about it.
Are a little associated with renters and stuff like that.
That's not the product these builders are building.
There are townhome now that restricts rent, and therefore it's going to be owner occupant that's going to be in there. So don't look down on townhome, because the new products are way different from what the old styles are.
And for the agents in the burbs that's not really used to dealing with a lot of townhomes and things like that, they are coming. Here in Henry County, we know of almost 700 townhomes under construction right now.
And they're going to be pretty. I mean, they're not your average townhome back in the day.
So be expecting to be able to move some of your entry level first time buyer clients, be talking about townhomes much more so than you have in the past. At the same, we talked about this just a little bit ago. Our buyers are moving to states in record numbers, and while we're not number one, we are number 10 in the country. That's a pretty good place for us to be. And this is on cities. This isn't just states kind of thing. So you can see that Here in the South, you got Florida, a couple of cities in Florida and that kind of stuff. And then Texas, and then Atlanta is right up in there as well, kind of thing. And so where the most boats move from, New York City.
For us, that is.
Yeah, I mean, yeah, of course, that kind of thing, because we have great weather. We don't have any hurricanes.
Just a lot of pollen. We have yellow snow here during the spring.
Okay, yellow snow is not how I'd word it, kind of thing.
We have yellow pollen.
Gotcha.
So there we go.
All right. It turns out that pets may actually attract buyers to homes. This has been a point of contention for Ming and I, because in the past, I've been the big person about we have to put the dogs away. We have to hide the pets. You can't have the dogs. It turns out she was pretty much right, that we're seeing where more and more that buyers don't mind dogs, so long as there's no damage, so long as it doesn't stink, so long as it's not beat up
and also the fencing's a plus, because now the new home buyer does not have to go in and build new fencing.
Yeah. So not only is it that it doesn't deter, almost 20% of folks would rather make an offer on a home that has pets, as long as it doesn't have damage. So
if you think about during pandemic, I mean, all the adoption shelter were empty.
Well,
there was 70%, a lot of pets.
70% of homes now have dogs.
Yeah, and they become a companion for most folks. So
now, the only negative out there is barking neighbors' dogs. Barking neighbors' dogs, that's a turn off. And so I don't know how to muzzle the neighbors' dogs, but that's going to continue to be our challenge there. Where home improvement is improving. Now, this is another thing going on. So, these are the top, where the top amount of spending is going on home improvement centers inside the United States. And so Atlanta comes in about 16% increase in spending. Of course, we're a big Home Depot place, we have, Home Depot's headquarters are here, but I see a lot of this is coming simply because our sellers can't sell. Well, let me back up. They can sell,
but they're not going to sell the premium dollars.
Well,
so a little bit of fixer upper goes a long way. Will they get dollar to dollar back? That depends on what the project is.
But the other side of that is that we're seeing where instead of selling, some folks are making their house into what they want it to be. So, that's the other side of things. Yes, they are creating their castle. And so I don't think that's necessarily great, but I do understand they are increasing their overall net worth. Yeah.
Right. But the thing is that you may not get 100% back of what you put in, simply because those are for your personal enjoyment.
Yeah. Millennials are making up the biggest share of our buyers, 43%. It is up, kind of thing. So last year, millennials made 37%. So we're talking about a pretty significant jump in just a year. And so that in a way, it's almost surprising, right? Because the millennials are our youngest buyers. And so during the time when we saw some of the greatest property value increases is also the time when millennials made up the largest share of property.
That's because they've been living with mom and dad and saving up their money.
True,
Most millennial knows
I'm going to
that
come when I want to come.
They got $30,000 to $40,000 in saving, and therefore that's what made them aggressive and ahead of the game.
Yep. And then they released some new information here in Georgia. We averaged $219 per listing on real estate photography. Not that that's anything I'm trying to promote or not promote, but just as a general benchmark, you can see some states spend a lot more, some states spend a lot less, but somewhere around that $200 to $225 range is pretty median in there. Now, South Carolina, they got it going on. They spend almost $300 in South Carolina, but that's our normal here. Right now, 39% of Latinos are in the market for buying a home. And when you think about that as a as a group of buyers, you find
that's 40%.
40% of Latinos are trying to buy a home right now, kind of thing. And so I just think that's a really interesting statistic. And we really need to be reaching out to our Latino home buyers, because a lot of them want to buy a home. Now, why does this was a survey of Hispanic buyers about what is important when they choose a neighborhood. And what I found really, really interesting, number one is safety.
Yeah.
Yeah, safety is the most important factor. Safety beat price. Price is number two. So safety is the number one factor for our Hispanic buyers. After that, overall affordability, commute times, shopping, quality of schools. You can see it all in there kind of thing as it goes down. Still remember that April 10th is the best week. And so we're getting really close to that. Don't forget that that's going to be the primo time for your sellers to list their property. Please continue to preach that going on out there. Now, as far as CE classes and training this week, today we have our, we're doing a replay of our KB Core session 1, which is setting up KB Core. Last week, we did Monday, Tuesday, Wednesday, Thursday, all the different sessions. And during those sessions, what happens is there's a live trainer that's covering that whole segment for an hour, and then they answer questions at the end. We encourage everyone, and we still encourage you to come into the office and kind of use the other agents as sounding boards, be able to kind of bounce things back and forth. What I will caution you though is you can't go in and be able to complete this section as they go through it. They go through it like they're in a race car.
Yes, it's very fast paced. So the videos are available and you can review them back again if you miss a segment, or just go back to see what they're talking about at a more understanding pace.
Yeah, and so all the training is on there. So if we can be of any assistance to you, please let us know. On Tuesday, we have Games Houses Play, and that's in person over in our Fayetteville office. On Wednesday,
so I believe that's inspection, isn't it?
Yeah, it's okay. Home. No. I'm sorry. That's pest control.
Okay, so pest control.
Yeah, it's a lot of fun, actually.
Well, no, seriously, y'all. I know some of you guys been pest control companies, CE, but as we change over time, so has the habits of the past. So it's good to understand what you're looking for and what they're looking for, so you can better educate your clients. So even if you take this class a couple of years back, let me just encourage you come to this one, just get, if not a refresher, because I know bats wasn't an issue, but I have seen a lot of bats issues lately. So
all right, on Wednesday, I am teaching how to make money with real estate investing.
Woo-hoo!
And so that's a class that I am actually finishing, resurrecting. And I've never taught this class before, so I put it all together kind of thing. And so if you are interested in either being an investor, operating as an investor, or working with investors, please, I'm teaching this in person at our airport office on Wednesday. On Thursday, we have Marketing for Realtors, taught by Discovery. That's in Noonan. And then also on Thursday, we also have an appraiser's guide to CMAs. It's a virtual class. So we hope that you guys have a really great week. If we can be of any kind of service, please let us know. Call, text, smoke signals. We do it all. Please have a great week.
Happy Monday, y'all. Take care.